Assalamualaikum and hello everyone. My name is Iza and we will be presenting the purchase cycle. Before we start, this is basically all the important elements in the purchase cycle and we will further discuss on each part of it. By the end of the presentation, you will be able to know and understand these important elements in the purchase cycle. As a first presenter, I will be explaining the process of purchase cycle as well as the document involved in the cycle. So let's get started. The first process is requisition for goods or services. The requisition is coming from design or other department level, and it is based upon the requirements for that specific department. However, the department is not actually ordering the goods. The requisition is going to the purchase department, and the department is responsible for ordering the goods, developing contract with the vendors, identifying pricing, the quality of vendors, and so forth. And then the entity will make a request for quotation. After the quotation, the relevant department such as purchase department or finance department will select a vendor on the basis of quality, price, vendor history, delivery time basis, and many more. Then the IT department will issue a purchase order to selected vendor and the goods are actually ordered or purchased. When the goods or services are received, they will receive the goods or services through the receiving department, and the department will acknowledge the receipt and account for the goods and services. In other words, the receiving document will record and count the items that have been received and will enter the data into the computer system. The next step of the process is actual approval for payment. The approval of payment comes from the accounts payable department and they will receive an invoice from the vendor. Then, they match this invoice with what was received and what was purchased, referring to the quantity and pricing of the goods. It is based upon three-way match, which refers to matching three documents, which is the invoice, the purchase order, and the receiving report. It is to ensure that a payment should be made. If this three document is matched, then the account payable department approves for payment and will go to the cash disbursement where the payment is made. The last step is payment made to the vendor. As per the payment terms mentioned in purchase order, finance department or account department will release the payment to vendor. And that's it. That's the last process in the purchase cycle. So let's move on to the next part, which is the document involved in the cycle. The first document involved in purchase cycle is purchase requisition. When someone at the company wants to make a purchase, what they have to do first is they have to prepare a document called purchase requisition, which is used to request authorization for the purchase of the goods and services. So, before you place an order or make a purchase, you must ask for the permission first from the authority. So this is the purchase requisition document it looks like. Second document is purchase order. It is a contract that forms an agreement between a buyer and a seller, which concerning the goods that the buyer wishes to purchase. This document includes the description, quality and quantity of the goods and other information of the goods or services being purchased. This document also indicates who approved the acquisition and represent the authorization of the goods or services. When the goods and services are received, it includes a receiving report that is prepared at the time of the goods are received. A receiving report is used to document the contents of a delivery to a business. The form is filled out by the receiving staff of the business accepting the delivered goods. The fourth document is vendor invoice. It is a document from the vendor that shows the amount or bill owed for an acquisition. This vendor invoice includes the description and quality of the goods, shape, or services provided, the price, and the terms of trade. This document is an external document. The fifth document is voucher. and it is usually used by entities to control payment for acquired goods and services. It is basically all the documents that is put together in a file or called voucher packet. In that file, it contains a purchase requisition, purchase order, invoice, receiving report, invoice approval, and checks. The next document is purchase journal. This document includes vendor name, date, amount, and account classification. And the voucher register is used to record the vouchers of the goods and services. Account payable subsidiary ledger is an accounting ledger that shows the transaction history and amounts owed to each supplier and vendor. The eighth document is vendor statement that is prepaid monthly by the vendor to indicate the beginning balance, current period purchases and payments, and ending balance. And the last two document is check or electronic fund transfer or cash disbursement journal.
Hi, my name is Nur Amalia Aisha binti Izani, matric number 199185. Now I'm going to continue the presentation by explaining to you guys about the accounts involved in purchasing cycle. So basically there are three transactions, which are purchase transaction, cash disbursement transaction, and the last one is purchase return transaction. As for the first transaction, which is purchase transaction, the accounts involved are accounts payable, inventory, purchases or cost of goods sold, other asset and expense accounts. For cash disbursement transaction, the first account is cash, the next one accounts payable, cash discounts, other asset and expense accounts. For the last transaction, which is purchase return transaction, the accounts are purchase returns, purchase allowance, accounts payable, other assets and expense accounts. Next one, we move on to the journal entries. The first transaction just now is purchase transaction. So as for the inventory, if the inventory is purchased on account, the journal entry is that we debit inventory, credit accounts payable. For cash purchase of inventory means we purchase inventory using cash. We debit inventory, cash is be credited. And the next one is cost of goods sold. We debit COGS, credit purchases and inventory. The last one, as for the example of other asset and expense account, we can use transportation costs where we debit freight in and credit cash. The next transaction is cash disbursement transaction. For the first one, as for the acquisition of asset, we will debit asset, credit cash. The next one, for payment on accounts payable, we will debit accounts payable and credit cash. The third one, for purchase discount, we will debit accounts payable, credit cash, and also purchase discount. And for the example of expense account, we will use paid expense liability, where we will debit expense and credit cash. The next one is purchase return transaction. For purchase return, we will debit accounts payable, credit purchase return. Purchase allowances, we will debit accounts payable, credit purchase allowance. For the return on asset, we will debit accounts payable and credit asset. And for the example of asset and also expense account, we will use transportation costs where we debit freight out, credit cash. Now we move on to the flow chart of purchasing process. So firstly, the purchasing department will receive order from other department for purchase requisition. And once the purchase request is approved, the input from purchasing department is sent to IT department. In IT department, they will be doing purchase order program where the purchase order is sent to vendor, accounts payable department, receiving department, and purchasing department. In receiving department, from the purchase order, goods is being received, counted, and inspected. Then the receiving report will be sent to accounts payable department and also enter vendor for quantity and purchase order number. In accounts payable department, the purchase order, receiving report, and also invoice from vendor is collected. Then the accounts payable department will compare the invoice with the purchase order and receiving report, and they will also be doing review account distribution, and the voucher packet is being produced, and the input is sent to IT department. IT department will do accounts payable update daily and also weekly or monthly. For daily, accounts payable listing and also cash disbursement report is prepared. Cash disbursement report is sent to accounts payable department for them to review the documentation and authorize payment. And again, it is sent to IT department for check and EFT listing. Check and EFT listing will be sent to cashier department. So just now, IT department also update their accounts payable weekly or monthly. So as for this weekly or monthly, the general ledger is the final document. In cashier department, they will review the check and EFT listing. Check is being sent to vendor while the EFT listing sent to purchasing department for them to file miraculously the EFT listing. So I'm going to pass the presentation to Shaza Atira. So she is going to be explaining about the internal control involved in purchasing process.
Hi, Assalamualaikum. My name is Nur Saza Atira binti Ismail. Now, I would like to present about the internal controls that involve in the purchasing process or cycle. Segregation of duties is an essential part of the effectiveness of internal controls for any businesses. Every duties should be assigned so that no an individual can control all the purchasing process by himself, which can lead to fraud or financial misstatement. Then, individuals who are responsible for requisitioning, purchasing, and receiving should be segregated from the invoice processing, account payables, and general ledger function. For example, if IT is used in the purchasing process, there should be proper segregation of duties in the IT department. There are four key segregation of duties. The first one is the purchasing function should be segregated from the requisitioning and receiving function. The example of possible errors or fraud from conflicts of duties is fictitious and unauthorized purchases can be made that can be result in the payment for unauthorized purchases and the theft of goods. The second one is the invoice processing function should be segregated from the account payable function. The possible errors or fraud that can be made is purchase transaction can be processed at the wrong price, incorrect terms, or cash disbursement can be processed for goods or services that not received by the entity. This can result in the overpayment for goods and services or the theft of cash. The third one is the disbursement function should be segregated from the account payable function. The example of possible error or fraud that can be exist is unauthorized payments supported by fictitious documents can be issued and unauthorized transactions can be recorded. This also can be result in theft of the entity's cash. The last one is the accounts payable function should be segregated from the general ledger function. The example of possible errors or fraud from conflicts of duties is individual who responsible can conceal any duplication that would normally be detected by reconciling subsidiary record with the general ledger control account. Next, we move to the next slide by presenting about the risk area and the purchase cycle. As we know that the auditor must follow a, a risk assessment process to identify the risk of material misstatement in the financial statement accounts. The risk of material misstatement is composed of two components of the risk model, which is inherent risk and control risk. The first one is inherent risk assessment. The auditor should consider the relevant inherent risk factors that may impact the transactions process and the financial statement accounts. There are two factors that should be considered by the auditor in assessing the inherent risk for the purchasing process. First, the first factor is industry-related factors. The auditor must consider two industry-related factors in assessing the inherent risk when auditing the purchasing When auditing the purchasing process, which is whether the supply of raw material is adequate and how volatile raw material prices are. If the entity deals with many vendors and prices tend to be relatively stable, there is less risk that the entity's operations will be affected by raw material shortages or that production costs will be difficult to control. But the problem is when the entity must deal with one vendor or supplier and they are unable to provide the supply, the production shortages and shipping delays will be suffered by the entity and significantly affected their financial statement. The auditor needs to assess the effects of such industry-related inherent risk factors in terms of assessment such as valuation. The next factors is misstatement detected in prior audit. The purchasing process and its related accounts are not difficult to audit and do not result in the contentious accounting issues. Therefore, auditing research has shown that the purchasing process and its related accounts are likely to contain material misstatement. Thus, the auditor's previous experience with the entity's purchasing process should be reviewed as a starting point for determining the inherent risk. Next, we move to the last point, the other component of the risk model, which is control risk. The auditor is adopted a reliance strategy for the purchasing process. There are three major steps in setting control risk for the purchasing process. The first one is understand and document the revenue process based on a reliance strategy. The auditor must understand the 5 components of internal control in order to set control risk for the purchasing process. There are 5 components of internal control. The first one is control environment. There are 2 factors are particularly important when the auditor considers the control environment and the purchasing process, which is the entity's organizational structure and its method of assigning authority and responsibility. The entity's organizational structure for purchasing may impact the auditor's assessment of control risk because control activities are implemented within an organizational structure. Next, authority and responsibility for purchasing are usually given through that limit the amount of purchases that can be made by various levels of authority within the entity. The next component of internal control is the entity's risk assessment process. The auditor must understand how management consider the risks that are relevant to the purchasing process, estimate their significance, assesses the probability of their occurrence, and decides what action to take to address those risks. Some of these risks include a new or redesigned information system, rapid growth, and new technology. Each of these factors can represent a serious risk to an entity's internal control system over purchases. The third component of the internal control is control activities. When a reliance strategy is adopted by the auditor for the purchasing process, the auditor needs to understand the controls that exist to ensure the management's objectives are being met. The fourth of the components of the internal control is information system and communication. For each major class of transactions in the purchasing process, the auditor again needs to obtain four following information. The first one is how purchase, cash disbursement, and purchase return transaction are initiated or started. The second one is the accounting records, supporting documents and accounts that are involved in the processing purchases, cash disbursement, and purchase return transaction. Third one, the third purchasing process. The third for information that auditor needs to obtain is the flow of each type of transaction from initiation to inclusion in the financial statement, including the computer processing of the data. The last information that the auditor needs to obtain is the process used to estimate accrued liabilities. The auditor develops an understanding of the purchasing process by conducting a walkthrough. The auditor has the prior year's documentation of the process to assist in the walkthrough, although the possibility of changes in the system must be considered. If the system has been changed, or the audit is for a new entity, the auditor should document the system. The last component of internal control is monitoring of controls. The auditor needs to understand the entity's monitoring processes over the purchasing process, including how management assesses the design and operation of controls. It also involves understanding how supervisory personnel within the process review the personnel who perform the controls and evaluate the performance of the entity's IT system. Next, we move to the second step in setting control risk for the purchasing process, which is plan and perform tasks of controls and on revenue transaction. The auditor analyzes the purchasing process in order to identify controls that ensure that material misstatements are prevented or detected and corrected. Test of controls would then be necessary to verify that this control is operating effectively. The auditor would examine a sample of purchase transactions to determine if the acquisition of the goods is consistent with the entity's authorization policy. The last step in setting control risk for the purchasing process is set and document control risk. The modifications are normally necessary to the plan level of detection risk, and the auditor may proceed with the plan substantive procedures when tests of control support the plan level of control risk. When the tests of control do not support the plan level of control risk, the auditor must set a higher level of control risk that can lead to in a lower level of detection risk and leads to more substantive procedures than originally planned. The auditor should document the achieved level of control risk, and documentation of the control risk for the purchasing process might include a flowchart, the results of tests of controls, and a memorandum indicating the auditor's overall conclusion about the control risk.
Before we move to the assertions and the relevant audit procedures, there will be three types of transaction of purchase, and I will be explaining the first type of transaction in purchase cycle, which is purchase transaction. So the first assertions about classes of transactions and events for the period under audit of purchase transaction is occurrence. Occurrence means that all that have been recorded have occurred and pertain to the entity. The possible misstatement here is that the goods are not received when the purchase have been recorded. To reduce the risk, the purchase are not recorded without an approval of purchase order and receiving report. So they must have a legitimate document or purchase order to indicate that the goods are being approved and will be received the goods. So what can auditor do? The auditor can test a sample of vouchers for the presence of an authorized purchase order and receiving report. The second assertion is completeness, which means that all purchases that should have been recorded have been recorded. If not, the asset or expense will be understated. The control to ensure the completeness assertions is accounting for numerical sequence of purchase order, receiving report, and vouchers. So what should the auditor do? The auditor can trace a sample of receiving report to their corresponding vendor invoice and vouchers. If the receiving report is matched to a vendor invoice and vouchers, the auditor has high level of assurance of completeness assertion. If the results of the test of control support the plan level of control risk, the auditor must conduct substantive procedures at the plan level. However, if the results of the test of control do not support the plan level of control risk, detection risk has to be lower and substantive procedures has to be increased. So auditor can do more tests by trace a sample of vouchers to the purchase journal, which is a backward tracing. The third assertion is authorization, which means that all purchases are properly authorized. The possible misstatement due to authorization is purchase of goods or services are not authorized by the authorities. Therefore, the test of control that can be done is by reviewing entities monetary limit for acquisition. The auditor can do more tests by test a sample of purchase requisitions for proper authorization.
Now I'm going to explain about the fourth assertion for this transaction, purchase transaction, which is accuracy. So the possible misstatement here is that the vendor invoice may be improperly priced or incorrectly calculated. Therefore, internal control should have the responsibility to make sure that the vendor's invoice is being calculated correctly as in mathematically verified by the in-charge personnel. However, if the auditor finds out that the internal control is ineffective, tests of control will be performed by the auditor where they will recompute the mathematical accuracy of the vendor's invoice. And if the auditor still find out that the control risk is still high, therefore, to lower down the detection risk as well as the audit risk, substantive test of details need to be done more. Therefore, the auditor will recompute the mathematical accuracy of a sample of vendors' invoice. Okay, so for the next assertion, which is cut off, the possible misstatement is the purchase transaction may be recorded in the wrong period. So the internal control should have the responsibility to make sure that all of the receiving reports is being forwarded to the accounts payable department daily. And if the auditor finds out that the internal control is ineffective, tests of control will be performed where the auditor will compare the dates on receiving reports with the dates on the relevant vouchers. However, if the auditor finds out that the control risk is still high, to lower down the detection risk as well as the audit risk, substantive test of details will be done more by the auditor, where they will compare the dates on receiving reports with the date transactions were recorded in the purchase journal. Okay, so for the last assertion for this purchase transaction, which is classification, the possible misstatement is maybe the purchase transaction is not being properly classified. Therefore, the internal control should have the responsibility to check about the chart of accounts. However, if the auditor finds out that the internal control is ineffective, test of control will be performed by the auditor where the auditor will review the purchases journal and general ledger for reasonableness. And if the auditor finds out that the control risk is still high, therefore, to reduce the detection risk as well as the audit risk, the substantive test of details need to be done more. Therefore, the auditor will verify classification of charges for a sample of purchases transactions.
Assalamualaikum warahmatullahi wabarakatuh. My name is Mumirah and I'm going to continue presenting on the second transaction, which is cash disbursement transaction, with the assertion about classes of transaction and events for the period under audit. So the first component is on occurrence. The possible misstatements with regards to the occurrence is that the cash disbursement is recorded but not made. So after the internal control has done their part, which is the segregation of duties, the auditor will assess the internal control whether it is can be relied on or it is not effective. Therefore, if the auditor finds out that the internal control is not effective, the task of control that can be done after assessing the internal control is that the auditor may observe and evaluate the proper segregation of duties. After auditor assess or perform the test of control, the auditor needs to question whether the analytical procedure can be performed effectively or ineffectively. However, if the analytical procedure cannot be performed effectively, the auditor may perform more substantive tests of detail by, in this case, by testing a sample of vouchers for the presence of an authorized purchase order and receiving report. The second component is on completeness. The possible misstatement with regards to the completeness is that the cash disbursement has been made but not recorded. So after assessing the internal control, if the auditor finds out that the internal control is ineffective, therefore, the auditor will perform tests of control by examining and testing the indication of management reviews listing of cash disbursement. And then, if the auditor finds out that the control risk is still high, and in order for the auditor to reduce the audit risk, the auditor needs to reduce the detection risk by doing more substantive tests of detail, which is by tracing sample of vouchers to the purchaser's journal. Next slide. Authorization. Possible misstatement with regard to the authorization is that the cash disbursement has not been authorized. So the example of test of control that can be done by the auditor is that the auditor may evaluate the segregation of duties, since that is what the internal controls are doing. However, if the auditor finds out that the analytical procedure cannot be performed effectively, the substantive test of details is in need to be performed by the auditor, which in this case the auditor need to test sample of purchase requisition for proper authorization. The fourth component is on accuracy. The possible misstatement with regards to the accuracy is that the cash disbursement is recorded. However, it is recorded at incorrect amount. So, if the after the auditor assesses the internal control, if the auditor finds out that the internal control is ineffective, therefore the auditor needs to perform the test of control by reviewing the reconciliation. After performing the test of control, um, the auditor needs to inquire whether the analytical procedure can be performed effectively or cannot be performed effectively. However, if the analytical procedure cannot be performed effectively, therefore the auditor needs to do more following tests, which is do to perform substantive tests of detail by recomputing the mathematical accuracy of a sample of vendors' invoices. The fifth component is on the cut-off. Possible misstatement with regards of the cut-off is that the cash disbursement is recorded in the wrong period. So the test of control that can be done for the cut-off is similar with the test of control that can be done for the accuracy, which is by reviewing the reconciliation. Um, so after performing the test of control, the auditor needs to assess whether the control risk is still high or the audit risk is low. If the auditor finds out that the control risk is still high, therefore the auditor needs to reduce detection risk by to perform more substantive tests of detail, which is by comparing the dates on the receiving reports with the date transaction were recorded in the purchase journal. The last, but certainly not least, is the classification. The possible misstatement with regards to the classification is that the cash disbursement is charged to the wrong account. So, after the auditor finds out that the internal control cannot be relied on, so the auditor needs to perform the test of control, which is by reviewing the cash disbursement journal for reasonableness of account distribution. And then, if the auditor finds out the control risk is still high, so in order for the auditor to reduce the audit risk, the auditor needs to perform more substantive tests of detail by verifying the classification of charges for a sample of purchases transaction. Moving on to the next slide is on the final and the third purchase return transaction. The assertion about classes of transaction and events for the period under the audit. The purchase return transactions are not material for most entities. However, it is the responsibility of the auditor to be skeptical and even to inquire about this transaction. And that is why no test of control done for the purchase return transaction series, since it is often few in number and not material. However, Substantive analytical procedures are the tests that are usually performed to test the reasonableness of the purchase return transaction. Next slide is on the assertion about account balance, disclosure for account payable and accrued expense. Account payable and accrued expense are the two accounts that are affected by the auditor's achieved control risk. So the assessment of inherent risk and control risk for the purchasing process are used to determine the level of detection risk for conducting substantive procedures for account payable and accrued expenses. Therefore, substantive analytical procedures and tests of details of account balance and disclosure are the two tests that are used to test the account payable and accrued expenses. So, substantive analytical procedures itself is can identify the accounts payable and accrued accounts that are misstated, and also it can provide evidence with regard to the fairness of the recorded account. Next slide is on the examples of the substantive analytical procedure used auditing account payable and accrued expenses. As we can see in this table, there are two different possible misstatements detected, which is it is either under or overstatement of liabilities and expense, or it is under or overstatement of purchase returns. Last but certainly not least is the test of detail of account balance and disclosure for account payable and accrued expenses. Normally, most of these tests are conducted as tests of control. However, if the controls are not operating effectively, or as what I mentioned earlier, if the auditor did not rely on those controls, substantive tests of transaction may be necessary for the auditor to reach an appropriate level of evidence. So, as we go to the assertion about account balance, for the first one is that the existence. Existence as in the account payable and accrued expenses are the valid liabilities. So, the auditor may perform tests of details by obtaining the selected vendor statement and reconcile to vendor accounts. The second component is on the rights and obligation. So, account payable and accrued expenses are the two accounts that are the obligation of the entity, not to the third party obligations, but the obligations of the entity itself. So, the test of details that can be performed by the auditor is by reviewing the voucher packers for presence of purchase, requisition, purchase order receiving report, and vendor invoices. The third component is on the completeness. So, supposedly all account payable and accrued expenses have been recorded. So, in order for the auditor to perform the test of detail, the auditor may obtain listing of accounts payable and agree to total to general ledger. Last but not least is the valuation and allocations. So, account payable and accrued expenses are included in the financial statement, and any resulting valuation or allocation adjustment are appropriately recorded. However, if there is the need for the auditor to perform the test of detail, the auditor may obtain listing of account payable and account analysis schedule for accruals. Basically, that's all for the purchase cycle. I hope it is informative enough for you guys, and I hope you guys learned something. And thank you so much for watching and listening. Assalamualaikum warahmatullahi wabarakatuh.